How much Bitcoin do you need to retire?
No, stop. Wait. That's not the real question.
Right. We all know that the real question is that how many Bitcoin do you need to buy a nice, handsome husband with a big heart?
But that's not the real question either. I didn't have any Bitcoin back then. I still got you.
But what is the real question then? We'll come to that. By the way, Bitcoin isn't in from breaking this half-year pattern of lower highs. We already broke the pattern of lower lows back in September, as you know, if you were watching at the time. More on that later. There are parents here where we live who are dropping off their kids in a Rolls Royce. The last thing I want is to drop off kids in a Lambo, getting stuck in the potholes. Do you want a Lambo?
No. Also super difficult to get out from the Lambo.
Exactly. And you said you don't want the Birkin either.
No, I don't know. I don't like the design.
So what's the point of money then? Lower class, wife doesn't work. Middle class, wife works. Upper middle class, wife doesn't work. Upper class, wife runs a small business that loses 10K a month.
I still work.
That was a close one, guys. No, but one important benefit of money is that it becomes unimportant in your life, that you can remove it from your brain.
When I went to university, I remember going into grocery stores and I looked at every single price tag. I even divided, per gram, how much this per gram, and compare them and chose the cheapest one. At that time, my definition of rich was that I don't have to look at the price tag before buying anything. Clothes, grocery, anything.
Later in life, if you're providing for a family, if money is about to run out, you feel kind of threatened. Then it's more difficult to take brave, courageous decisions and to even think strategically. And if money is finished, it becomes everything. Just removing that worry from your mind is huge. So the point of money is still to retire then.
No, I think that's a mistake too.
At least in the traditional sense of working, saving up money, retiring, and then being retired. In fact, I think you get old if you retire. Even if you retire young, you'll start talking about past achievements when you did something great. That's boring. Do you think Elon Musk would have a more fun and interesting day if he built electric cars and AI and rockets, trying to get humanity to become a multi-planetary species? Or if he sat with a drink by the pool and talked about his glorious PayPal days. The reason he seems so excited isn't because he has money for entertainment or because he's retired. It's because he can do whatever he wants with his time. The goal is not to retire. The goal is to wake up and be able to do whatever you want.
Why not losing 10K a month?
Preferably. What you can buy with money is your own time. If that for you is playing the violin all day, great. Or if it's sitting on the beach with margaritas and ladies or toy boys right and left, great for you. But even then, after a couple of months of that, I think you will start craving for some personal growth to be of use, for some challenges again, for some purpose, at least part of the day or part of the month. So the real question is, how do you buy your freedom? How do you buy your time?
And it's worth the effort. I love what we have here, the flexibility. I can work at whatever time I want.
Yeah, we decide when we want to work until 4 a.m. because we're so excited and can't stop. And which days we don't want to work at all. Take the kids to the beach instead.
Have time for each other. Enjoy paradise.
Unsurprisingly, I'm not the first person who has realized this. There's even a popular model from the traditional finance world that you've probably heard about or seen. How to retire early with FIRE. Financial independence, retire early. For example, someone who earns 70K a year. With a FIRE strategy, they could save 10% of their income, or 7K a year. And what this strategy says is that you need to save up 25 times your annual spending, which would be 1.58 million. Then it would take this person about 37 years to reach financial freedom. So what this strategy means then is that instead of living paycheck to paycheck, where you basically spend the money that you make and then retire living on pension, what they're suggesting instead is that you save 10% of your income, meaning that you will have little bit less money during those 37 years, and then you're retired, living off this money. Next example, this person is pursuing FIRE by saving 30% of their income. Then it takes them 22 years to reach the 25x multiply. 22 years saves 30%, he has less money to live on, but he can retire earlier. And final example, 50% of your income. You hit financial independence in about 14 years. If you live upside down in a shoebox, you don't spend any money, only need to do that for 14 years before you retire and then start living off that money. Great, only 14 years. I think this is a complete mistake. A terrible idea, in fact. And that's not even including the fact that it's not even correct. It's more 29x, or for early retirement, 33x. So even though doing this, what can actually happen is still this. Same problem as where we started. But the glaring hole in this strategy is, why would you forego comfortable lives now to retire early in the future? Why would you make it your strategy to do something you don't want to do for decades? Living cheap, being bored, and then retire and become completely unproductive over here. Which might be fun in the beginning, but I think you would be bored pretty soon after you get there. That's a garbage plan from start to finish, every element of it. I think there's a much better way, and in this video I want to tell you a very practical way you can do it, where you can buy your time, buy your freedom, not in 37 years or 22 years or 10 or 5 years, but today. My closing video from Sweden was about courage to make some changes in your life. Today is the official opening, and I want today's video to be a very practical way that you can make it happen. We're going to forget about the next 37 years and instead look at today, this month, the next 12 months. See your income in 3 blocks. The first one is savings or salary, reasonably certain short-term cash. Second block, income not as an employee and not as a gig at McDonald's, but in a way where your learnings compound and you work in era digitalis, where growth is exponential. And it has to be digital, where you have more freedom. Can you, for example, sell a consultancy assignment to someone delivered remotely? But Larsson, consultancy work doesn't grow exponentially. Isn't it the same as having a job? No, because if you're successful, you can hire a second consultant. Third block, investments. Here you have complete freedom. Of course, it's not going to look like this over the next 12 months, but probably more something like this. Investments are notoriously unstable, or it could even look like this. Perhaps your investment efforts from the first year ends in minus. Even the best investors in the world can have a drawdown year. So you do need a little bit of savings or salary for this time period. But you actively manage risk, and over time you gradually phase over your time and your focus in this direction, down towards the base. So the first year, perhaps it looks like this. You have some salary, some savings, you maybe manage to sell one consultancy assignment, and you make a little bit of return on some investments. Overall, this covers your expenses. That's all you need to achieve here. Then for the second year, perhaps it looks like this. You sell 2 consultancy assignments, Bitcoin goes up a bit with Larsson Gold, and you need a little bit less of the savings and salary to cover your expenses. Year 3, since there is a compounding element in these 2 blocks, perhaps the absolute number is more, and you don't need to feel bad spending a little bit more on expenses. And if you compound your learnings and your assets like this, there comes a year where you can choose to either keep both of these, like the Elon Musk example. He prefers to keep this part. You can too if you like, and have a base of investments. Or you might prefer to only do the investments. Then here, even if you have a drawdown year, you're going to be fine. This strategy is not a pipe dream. This is practically possible for most people of you here. I've interacted personally with thousands of you, so I know that for a fact. You guys here are interesting, impressive backgrounds. It's because of the people I meet here because of you that I do this. I'm sure you can call up some old contacts and sell a consultancy assignment or something similar. And I know that you can learn investing in tech assets because I've seen it with thousands of people among our members over all these years.
Objection. Okay, I worked in corporate, in telecom. I worked 100%, 150%. Then I go home, spend time with the family. I barely had time to sleep properly, to sleep well. At work, managing people took a lot of energy. Where can I find the time to even learn anything or do something else?
So what you need to do is to take another position where you work 75% or 50% if you don't have any savings in that bucket.
But then I will earn less, probably.
Exactly. So that's why we're adding 2 more buckets where the rest of your time will be spent.
Yeah, but it's still not good. Then I won't get an interesting position. I won't get to lead people, lead projects. Boring. In general, no personal growth.
You don't know that if you don't try. But even in that case, it's fine. Because our growth will now happen in the other 2 blocks. Now we change mindset from that the job will provide the growth to the job literally just sustaining you to pay some bills while you grow competence-wise and financially in the other 2 buckets.
So it means that I take some job where I'm overqualified then. That's my conclusion.
Probably correct. A tactic which many people have actually figured out.
Yeah, those are smart.
And just to drill this point home, you will never get rich from a job, even that 37-year example, or it's at least very difficult for 2 reasons. Number 1, even if you have epic success, you'll probably increase your expenses because you feel you deserve to enjoy a bit from the hard work. You'll buy a more expensive car, bigger house because you can afford it. But worse, your salary tends to grow fairly linearly. It's very difficult to find a job that grows compensation exponentially. Then you'll need some share in the company, which brings you back to being an investor after all. Then why not actually focus on that and try to do that well? While the other 2 blocks do tend to grow exponentially if you stay in the digital domain. You can absolutely grow a digital business in Era Digitalis by a certain % per year, rather than a fixed dollar amount per year. That's what exponential growth means. And for investment, it's exactly the same difficulty to grow, say, 10k by 50% as it is to grow 100k by 50% or 1 million by 50%. Only when there is very low liquidity in small assets, that could limit you from some assets. But largely, this is true into the hundreds of millions or even hundreds of billions. Same skill. Just look at Buffett's track record. So what do you need to do practically? Buy my course! That's it. Thank you, tack. CTO Larsson out.
Buy now. Very good. Very cheap.
No. Yes, but no. First and foremost, you need to take it seriously. Nothing worth doing is easy or happens without time and effort. Nothing will happen if you don't schedule time in your day to do it. That's why you have to either cut the job completely or scale it back in %. How many % you have to calculate here, but you only need this bucket to cover the costs now, not 25 times, because it's not the saving or salary bucket that will generate that freedom, but these 2 buckets, and gradually probably mostly this bucket. Making money investing is probably the easier of the 2 in my opinion, but very much less consistent over time. Both these are difficult. Everyone who tells you on X that it's so easy is lying to you. You need knowledge, learning, skill, capabilities, education, tools and friends, a community of people. But it can be done. I see so many people doing it right now. Next objection. Isn't this risky? Yes, there is no risk-free path to this. But then, neither is your job. I think many high-paid white-collar workers have gotten shocked that ChatGPT service that costs $20 a month could kind of do their job. It's the shock many factory workers got decades ago being replaced by robots or more cost-effective labor elsewhere. If you've never tried having a conversation with a voice interface of the ChatGPT app in the phone, do it now.
Good morning. Do you ever argue?
Good morning. I don't really argue since I'm here to help and have conversations, but I can definitely discuss different viewpoints or explore multiple sides of a topic if that's what you mean. What's on your mind?
Don't you think that never argue seems a little boring as a person?
I get what you're saying. Healthy arguments and debates definitely add some spice to conversations and help people grow. It's true that if someone never disagrees or challenges ideas, it can feel a bit flat. But my goal is more about being helpful and thoughtful than pushing back for the sake of it. What about you? Do you enjoy a good debate or do you prefer more relaxed discussions?
In fact, I never argue. I'm just explaining I'm right. I'm always right.
I see. If you're always right, I guess there's no need for arguments at all then, right? It keeps things pretty straightforward when there's nothing to dispute. How did you get so good at being right all the time? Haha, well, I'm glad I could play a part. Sounds like we're on the same wavelength. Anything in particular you've been right about lately?
I think he's more interesting and understanding and listening than almost all of the guys I have dated.
How am I holding up?
That's why I said almost all.
Phew.
You
Close
didn't
one.
listen.
Now picture a few more years of exponential improvements to this and other tools. I can assure you that many jobs are not safe. Are you sure yours is? And neither is the money in your bank. I talked to a guy just yesterday. He had worked his whole life in mining in Australia and saved up a sizable amount of money. Because working in mining in Australia, you can make a lot of money in salary. Decades of doing that, then he moved here. A nice sunny place. Put the money in the bank. Plan to live well and have fun. Money in the bank. Then the bank went bankrupt and the government didn't bail the bank out. IMF and those guys, nowhere to be found when you actually need them. So the money from his bank account was gone. 100k was insured by the government, so out of 6 million, he lost 5.9 approximately. So he had to go back to Australia, back to the mine, back to salary. Everyone talks about the risks with Bitcoin, but actually having money in a bank account is pretty risky too. I know that's a controversial statement, but if the rising debts and so on goes haywire one day and AI disrupts the economy a bit more than everyone expects, which I think could happen, more governments might decide to not bail banks out. Banks who have taken dumb risks with other people's money. When FTX did that, Sam Bankman-Fried go to jail for 25 years, even though the recovery for the creditors turned out to be 118% in USD terms. Ask that Australian guy which one seems more risky to him. Is it the biggest disaster in the history of crypto, the criminal FTX collapse, or his bank account? The point with these two stories is this. Nothing is risk-free. The world is changing. Era digitalis is happening right now. It's better to accept that there is a risk and have a plan to mitigate and manage it. If this happens, then I will do that. If that happens, then I will do this. The whole principle of serious investing is based on risk mitigation, capital preservation, stop losses, uncorrelation. I think it's the biggest mistake that most intelligent people have done over the past 10 or so years. They correctly identified that there is a risk with Bitcoin, with Nvidia, with Tesla, and with technology in general. And because it's risky, which it is, that's a correct assessment. Because it's risky, they stayed away. While the right action to take was instead to learn some ways to mitigate or manage that risk. For me, back here 6-7 years ago, it was the idea of trend, to at least try to not hodl through a downtrend. That way, if something doesn't work out, even a good project, I don't lose everything I put in. Because in technology, good stuff can drop 97 or more %. Even a good project like Solana, while still keeping exposure to the massive uptrends we frequently see in tech. And today, Larsson line is gold for Bitcoin. But I also said that this isn't so easy. We also need to learn a bit, learn to identify basic patterns, because when there is a consolidation period, there is no trend. What we want to see from here is for this period to conclusively end, breaking out this pattern into continuation. And the horizontal resistance is, in my opinion, at 71,400. But after that, which you can see if you look at the volume profile here, I think we will see very little resistance. The most recent point to enter was at the support bounce here with Larsson line gold. I saw this pointed out on social media yesterday, that there is an inverse head and shoulders in the Ethereum to USD chart. But I think what we mostly see here is Bitcoin going up versus USD, because the Ethereum to BTC chart hasn't really put in any bottom patterns yet. For this to become a double bottom, we need to break the high between the lows, which would be up here. And we're not there yet. If we get there, I'll talk about it then. The Solana to USD chart for the past 2.5 months looks very similar. It has also made an inverse head and shoulders with a perfectly clean neckline, and the breakout has confirmed. The difference versus the Ethereum chart is that the SOL to BTC chart doesn't look complete garbage. In fact, this key support level at 0.002 is still holding. But I have no religious love for any altcoin project. If the situation changes, bye-bye, next one. And that could absolutely happen, guys. I don't think 1 year ago that many people thought that Ethereum would be so challenged by Solana as it actually is now. And that could happen again. Perhaps SUI, though, I want to point out that short term, we're getting some kind of head and shoulders in the SUI to BTC chart. So watch out here, guys. And perhaps the Solana killer isn't even invented yet. MicroStrategy also has a breakout. This latest trend when Larsson line last flipped gold, there's no indications of it having ended here. On the contrary, this is another breakout pattern. We're joking around a lot today, but today is a big milestone for me. It's 4 months since I closed shop in my old country. That's 1/3 of a year. And of course there's been issues here, and risks and delays and complications. But I am slowly coming out of that. Twice as strong as before. I geared up. Double down. Today is the official opening. The course with Larsson line is now officially open. Go here. I have only one website, ctolarsson.com. Press here for course, or if you've taken the course, press here for pro. I think many people will be shocked at what we will achieve, how it will all come together, and you'll see how it all made sense. I don't think anyone will leave disappointed. Bitcoin isn't a yield-bearing asset. It doesn't pay 4% interest, but technology as a whole, which includes both tech stocks and crypto, is the field in investing where you have a reasonable chance for 10x, 100x or even 1000x gains. I've proven it over these years. And crypto charts behave identically to tech stock charts, just compressed a factor in time, so it's the same skill. You don't have to wait to make fire and then start living. Or worse, retire. You just have to get yourself up on the trajectory where you do whatever you want and still pay the bills. Assume growth of the capital, assume growth of your skill, manage risk. Then if it all goes to hell due to a freak black swan, tech investing gets banned in the whole world by an evil dictator, okay, then you go back to work, save a bit and try again. But perhaps it works out. Then you didn't grind all those years waiting for that point in the chart where when you reach it, you might find yourself bored. Instead, buy your freedom, buy your time today. Thank you, tack. CTO Larsson out.
CTO Larsson out.
Larsson.
Larsson. By the way, you talk about Rolls Royce and then you change the Lambo. I could say, but I want a Rolls Royce. I'm a very calm person compared to you.